Brokers don't want you to know this. I'm showing you a secret indicator of 2026. Have you ever noticed how brokers like to make trading seem like it's incredibly complicated? The problem most traders face is quite simple. They enter too late. I don't know why, but many traders see this as a blatant green flag. When the move is almost over, and when the momentum is starting to peter out, when the big players have already withdrawn their money and are exiting the market, that's when we enter a trade. Do you recognize yourself in this? That's why we're going to fix it today. And no, we won't be using any fractals, turning on 10 screens in a row, or any of these neural networks for trading nonsense. Just 3 tools that really help you read the market: the RSI, the EMA, and the MACD. But before we begin, don't forget to give this video a like and subscribe to the channel. I've also hidden a few letters through the video. If you combine them into a single word and write them in the comments, I'll personally give you 100% bonus on your deposit, so watch carefully. Now, let's get started. We'll be looking at 3 things at once: where the price is relative to the EMA, what the RSI is showing, and whether the MACD confirming the pressure shift. If all 3 signals start to match, then we can consider a trade. Well, let's go to the schedule. So we start with the CHF JPY OTC. It's immediately clear that the market is trending low. The price is already making lower highs, and each new upward impulse is weaker than the last. Meanwhile, the price is consistently bumping up against the 50 EMI and can't successfully consolidate above it. So selling pressure is already visible here. Next, we'll look at the RSI. The indicator approaches the 70 zone and begins to reverse downwards. At the same time, the MACD shows weakening of the upward movement. That's it. Buyer's momentum is simply starting to fizzle out. And this is precisely the moment that most people miss. They see green candles and think the rally will continue, even though the market is already starting to slow. But since we noticed this, we go ahead and open a downward trade, calmly taking the first profit. Now, let's move to the EUR JPY OTC. The situation here is a bit more interesting. The price is approaching the 200 EMA. If you look to the left of the chart, you can see that the market is clearly seeing this level. Frankly, I would have been very wary of entering at this point before, because the movement up to this point had been downward, and it seems as if the price will simply continue to fall. But if you look more closely, this is actually a signal that the market is starting to slow. The RSI is gradually emerging from the oversold territory, and the candlesticks are becoming weaker, and the sellers are no longer able to effectively push down the price. At the same time, the MACD is also starting to reverse and shows a weakening downward momentum, which is very good. That is, from the outside, the price may appear to be falling, but within the movement, a shift in pressure is already beginning. Therefore, here we open a deal upwards and calmly take another plus. Moving on to the EUR NZY OTC. Here, the price has been trending downwards for quite some time now, and the RSI is already firmly near 30, meaning the market is gradually entering oversold territory. But the most important thing is the price's reaction. Notice how the candlesticks are starting to look. At the same time, the MACD is showing a slowing downward movement, and it's starting to feel like the market is preparing for at least a local pullback. Most traders could certainly make a mistake now, either entering too early when the price could easily continue to decline, or conversely, being afraid to enter at all because the market is falling. However, the market never moves in a straight line. After a strong momentum, a pullback almost always follows. Therefore, we open a long trade here and take another profit. And the last trade is GBP JPY OTC pair. And here the signals start to align perfectly. The price is approaching the overbought territory. The RSI is again near 70, and the MACD is crossing downwards. The first normal signal that buyers are starting to lose control of the move. Meanwhile, the price itself is already starting to slow near local resistance. And this is where the market literally begins to betray itself. From the outside, it seems like the price could easily soar higher, but looking at the momentum, it's almost dead. So here, we're not trying to chase the upward movement. Instead, we're waiting for the confirmation of a weakening momentum and only then opening a trade down. And we're taking home our 4th consecutive gain. Most people are simply looking at the market incorrectly. They're trying to find one magic button that will generate perfect signals, even though the market works entirely different. Here, everything is based on understanding and momentum. When the RSI shows overheating, the EMA begins to act as resistance or support, and the MACD confirms weakening momentum. The market becomes much more favorable for trading. Yes, this doesn't give you a 100% win rate, but it's a system, not a random button. Pressing, hoping maybe something will take off. Be sure to watch this video again and try to spot these moments on the chart yourself. If you want to see more live trading sessions, analysis, and real-time trades, head over to my Telegram channel. You'll find the link in the description of this video. And don't forget to like and subscribe to the channel if you found this information helpful. Thanks for watching, and I'll see you in the next video.